just pushed in new trend lows here. We were just hovering right around the lows, and then we just push into new lows. I wouldn't chase it down here, but I'll tell you, this is a great. This is probably one of the best examples today of retail being slaughtered. Is today. I said it to my partners at Forex Analytics this morning. I said it to to a couple other trading friends of mine, and I even mentioned in our chat room. It's like everybody that's not a bank, is bullish the cable. And that, I know and I understand about positioning, and everybody's like, oh, but the positioning, everybody's short. It's the, record short positions. I understand that, but it's not, again, it's not, if there's record short or record long positioning in a currency for no reason, that's important to note. It's noteworthy. It's something that, yeah, let's pay attention to it. Oh my God, everybody is long the Mexican peso right now. Why? No reason. Everybody's just long the Mexican peso. Well, that's a problem. When everybody's short the pound, because they're going probably through they're going to go through the next couple years, probably the biggest economic shift for the UK that they've seen in, maybe several decades, then there's probably a reason why everybody's short the cable. It's not like people were short, banks are short the cable for no reason. Okay, so that's the thing, guys. I'm gonna say this, and I'm gonna say it again. Everybody and I know most of you guys use Twitter. For you use Twitter because you follow different traders and whatever on Twitter. Listen, go Kiwi, die. Hold on. I'm short at 94. Let me see here. What I'm going to do here. Hold on. I'm going to pull a quick. I just pulled a quick 13 pips out of the Kiwi. I just closed it really quick. I've got short Kiwi in other places. I'm long the Aussie New Zealand. I'm long the Euro New Zealand, by the way. Anyway, to make a long story short, everybody in the trading community expected the exact same outcome. There wasn't one person. There's not now. There are obviously you may have been, or there's other traders that were like me that were short the cable going into today, but I want to say every trader that I follow that mentioned the pound all said the same thing. Everybody's expecting the MPC to move today and to cut rates. Pound's going to rally. We're going to get a short squeeze. Positioning's too short. Man, we saw the exact opposite. This is a great example of just not a great, like if you were caught on the wrong side. I'm just saying this is a prime example of showing you what happens when retail is all on the wrong side. All on the wrong side. Okay, and look, I went into the Bank of England, short the pound myself, just from some position that I had, and I got influenced by a lot of traders out there. I'm like, maybe I shouldn't be short the cable as aggressively as I am, and I took a lot of it off the table. Yep, first class wussy right here. That's it. I am, admittedly. That's all right though. I had a nice recovery. It was good. I'm actually today net P&L. I'm doing better than I was an hour ago, so that's good. That's always a positive. Okay, so let's go into the charts, and we've got to get our analysis done. So let's. And we don't need to talk anymore about the cable at this point. It's it is what it is, and we're going to figure out where it may go, going into today. But let's start with the euro dollar. So the euro yesterday was a really good short in the euro, and I'm not. This is another thing that I shorted the euro at one point yesterday. I made a little bit of money, but I didn't hang on to this. But we had the A, B, C, D, the equal leg moves. You guys know we came up and retested the underside of this trend line, which is very, the 112.20 to 112.50 was our key pivot reversal area that we've talked about for, I don't know, I think we've probably been talking about shorting the euro right here. I think we've talked about that probably for the last 2 weeks. And, the euro this week rallied right to where we anticipated and rolled over. Right where we anticipated. Now, the question is, what do you do with it here? And I don't think it's smart to chase the euro short right now. Because if you look at this last move, and we may go lower, I'm just saying that if I was, because I don't have any euro exposure, if I was going to initiate a short trade, it wouldn't be right now, although we are below the 38% retracement. We might get down to 111, and I'll mark down 110.90, which is our 50% retracement, as support. We may get there to this support here, which is again, this is going to be the 110.90. I'm just going to write that down. But I would rather sell it on a. I'd rather sell it on a rally. So if we can get some sort of rally back towards 112, I don't know if we're going to get that, but 112 is probably pretty lofty as far as expectations. Maybe a move back to 111.50, 111.60, which would actually be. Let me get rid of this one here. Let me remove that. Oops. I'm going to borrow this line. Oops, that's not what I want to do. I'm going to borrow this line. I'm going to borrow this line. There it is. Okay. And we're going to put it right here. So if we can get a rally back to 111.60, that would be an area that I'd be more interested in shorting the euro. I'd be interested in seeing some sort of rally here back to 111.60 and then shorting it. Okay, that interests me. I'm not interested in shorting the euro at this point. Okay, so 111.60, whoops, 1.1160. That to me would be a better pullback, because if you get a pullback like that, and and my same saying goes that I've been saying it for the last month and a half, as long as the euro stays below 112, 112.50, it is bearish, and it's because as long as we're below, I'll just rephrase that. As long as we're below this yellow trend line, it is bearish. We may have rallied a little bit, but it's still bearish while below that yellow trend line. Anyway, I'd rather sell on a bounce, because this is going to give you a better risk reward. What's your risk reward here if you're shorting? What are you going to, short the euro here at 111.20 and risk above 112.50? That's crazy. Why don't you short it at 111.60? And then you can put in a 20 pip stop and look for a 50 pip move back down to support. That makes more sense from a risk reward standpoint. So that's how I'm going to trade the euro if I can get it. I'm going to try to get it on a pullback if I can get it. Let's go over to the cable. Okay, so what do we do with the pound now? Because the pound, in my opinion, is, and I'm going to say this again, I know some of you came in a little earlier and you might have heard it already, but I'll say it again. We came out of this triangle, so now any move back to the underside of this trend line, I will use it as a selling opportunity. So what does that mean? Here, let's get rid of that. We don't need that. We don't need that. We don't need that. We just need this. Okay. So now, any move back to 131.70, this would be like a sell zone. 131.70 to 131.90. So I'm gonna this area. This is the area that I would be using today, and I will be using for shorts. Right here. because again, this is all about risk management, right? Look, if I'm going to get short, I'd rather get short up here at 132, put in a stop at 132.20, because then I'd risk it having a false breakdown, but at least I know what my risk is. If you're shorting down here at 131.30 and then you got to put your stops above 132.20, I mean, you're risking 90 pips. Why not wait for a bounce if you can get it, risk 20 pips and look for a move back down to trend lows, or, obviously, I'm expecting more of a move back down in the 120s, but the risk reward is much better up here than it is down here. So 132, I'm going to say, is resistance now, and it's major. Okay, so we have to stay below 132 today. It is bearish. Okay, the support, I'm assuming that's without, this is eyeballing it, we just hit 127% extension. Close. So 131 is going to be support today, which is 127% extension. We may overshoot it a little bit, but that's where it is. All right, let's go take a look at the Swissy. All right. Here, James says, you nailed it perfectly in the euro dollar. Thank you. Thank you, James. All right, so here is the dollar Swiss. Now, I'm really, this is one of those currencies that has made me extremely upset because I don't own it. And you guys know I just was hoping and waiting for a move down to the circle area to 96 cents to get long. And I'm just so irritated that we just fell short of that. And what we've done is we come back, here, let's get rid of this. So all we've done is we've come back to this previous support level, which, is probably going to cap us for now. Now the question is, if we stop here at 97.55, which looks to be it, that's resistance, all right? Question is, where are we going to pull back to? Because I don't think, and I may be wrong here, but I don't think we're going to go down to 96 cents now. I think 96 cents is kind of a dream price pullback area. I don't see us doing that. God, what a wussy. I just cannot get over how poorly I played the cable. I really can't get over just what a pansy I am. Okay, anyway. All right, so to get down here would be very tough. We may get down here. I'm just saying, to get down here, I think it'd be very difficult for us to do. What seems more likely is we're probably going to get some, stop short, of whatever this is. We're going to, if we fall here, we're not going to fall that far. That's what I would think, So, and maybe even 97. That's probably too aggressive. I don't know if that's the peak, so I can't draw fibs just yet. But what I think, yeah, maybe it will. Huh. Okay. Any move down in the Swissy down to, like, I think you got to start looking at it at 96, 96.90, which you can see all these spike highs here. If you can get it, I think it's kind of lofty to even think we're going to get down there today, but whoops, 96.90. If we get down there, I think that would be a good opportunity for a bounce. We are in a range. We're in a big fat range with the Swissy. Big old range. All right. All right. Let's take a look at the yen. Here's the yen. So yesterday we formed really, really, really key resistance, and even overnight in the year. Excuse me. I yawn because it's 4:45 in the morning right now, where I sit. But I say overnight, but it's actually in European trade. This 101.50 has been resistance. Let me remove that. This is not a flag anymore. It's too elongated to be a flag. So let me remove that. Oh, I wrong. I removed the wrong thing. Dirtbag. Okay. Anyway. One oh two is possible. Any move up to 102 would be probably a good selling opportunity. You know what? I'm gonna say this because a lot of you guys weren't here earlier, so I'm gonna say it now. The one thing we got to watch today is how equity markets respond to another central bank doing more quantitative easing. Bank of England lowered rates, expanded its quantitative easing efforts. It's even buying corporate bonds, which that's the nail. That is the nail in the coffin of the cable. So if you guys don't understand why the pound is down today, it is that the Bank of England is now venturing into buying corporate bonds. So that is the determining factor that is driving the pound lower. That was the one thing that I told the guys in the chat room. I'm like, if they start doing corporate bond purchases, the pound's done. It's toast. And that's it. Okay, so now what the reason why this is important is because if equity markets globally shrug off the Bank of England's moves today, it's still early, guys. It's the markets haven't opened. North American markets haven't opened. It's all about what happens in the North American markets. Yes, the DAX is higher a little bit. Yes, the FTSE is higher a little bit. And yes, the S&P futures are higher a little bit. So are the Dow futures. But if we don't see the equity markets rally following the Bank of England decision today, if we don't see a rally in global equity markets today, that is, again, further evidence that the market is becoming immune to central bank activity. That is very important to understand as an investor, not just a trader, as an investor. I know many of you guys are traders / investors. Like myself, you got retirement accounts, you got to be real careful, because if central banks fail to respond to more, or excuse me, if the markets fail to respond to more central bank easing, that's not bullish. That's the opposite of bullish. Just FYI, we've seen it in the Nikkei, we've seen it in the DAX. Okay, let's see how the jury's still out. Jury is still out. The reason why I point all this out is because why is the dollar yen not trading at 103.50 right now? That's my question. Why is the yen not significantly weaker right now? That's my question. If the global equity markets were so strong, why is the 6J which is the yen, why is it not trading down here following today's meeting? Those are the questions you should be asking right now. Those are the questions that I'm bringing to the surface to this group that's listening in right now. It's a risk. It's a risk. So if you're one of those investors that just chased the stock market higher this morning because you're like, oh, well, we're doing QE. So if we're doing QE, stocks have to go up. Back to the dollar yen. All right, so what's this low? 1.0080. That's where the rubber meets the road for support. By the way, we are in a very bearish trend. That's bullish yen. We're in a very bearish trend in the dollar yen. We're in a, bullish yen um, uh, uh, situation at the moment. All right, where am I at? Oh, Canadian. Okay, so here's the Canadian. So the Canadian is stuck. Whoops, the Canadian is stuck between a rock and a hard place. We are. It's real tough. The Canadian's really tough. I'm going to tell you, I have not had Canadian exposure since I bought the dollar Canadian 2 days ago. It was 2 days ago, I think. Yeah, I bought it right here. Was it yesterday? Whatever this was. I bought it at 130.17, sold it at 130.60 or 57 or something, and I've left it alone since then. I haven't been touching the Canadian. I don't know what to do with it because to me it looks like crude oil wants to bounce, but but the crude oil bounce has been very tepid, and frankly, I still think crude oil is going down into the 30s. So, so it's hard for me to sit here and go, okay, well, if I think the crude oil is going down in the 30s, I want to buy the dollar Canadian because it's going back to 135. Yes, that's how I feel, but if crude bounces from 40.60 where we're at right now, or 40.70, and it bounces to 42, the dollar Canadian can come back down to 130 or maybe even lower. So I'm torn with how I want to trade the dollar Canadian right now. I have no bias. I mean, my bias is ultimately long dollar Canadian because I think crude is ultimately going lower. So I think buying it on dips is great. I just don't know where that dip is going to form. So with that being said, by the time we get down to this trend line, and by the way, this trend line is huge, like Donald Trump hands huge, okay? It's huge right here. 130, I would say 130.20. Oh, I'm sorry, huge. 130.20. Okay, resistance, huge. Resistance is 131.50. Oops. 131.50. And we are in a range. Make no bones about it. All right, I'm going to put you on hold for 5 minutes. I'm going to go get some more coffee. When I come back, we will do the Aussie, the Kiwi, dollar index, peso, Swedish krona, Norwegian krona. So we got a lot more to do, and we got a short time to get there. Be right back. All right, traders, this is Blake Morrow, and you are listening to the Morning Edge webinar. No, I had I don't want to call out names. I had one of our traders. He said, "Oh man, Pipzar's talking about me about, or Blake's talking about me about the cable, and everybody thinks the pound's going up." No, I'm talking everyone. Well, I say the whole trading community. I mean, I'm talking about everybody. I mean, everybody's like, "Oh, the pound's going to squeeze." I mean, and again, I'm not going to name names because I don't want to, I'm not going to talk bad about anybody, but it really did influence my decision making today, which is my probably one of the things that I'm most upset about today for myself is that I let so many talking heads and so many traders influence my decision making. For me, I knew I was right in my head. I know I'm right. I know I'm right. And just so you all know, I was short the pound dollar. I was short the pound dollar from yesterday at 133.35, and I closed it this morning at 133.15 or 18 or something. I made a measly 20 pips. And my stop, just so you all know, okay, so I'm just in. Okay, so here's the pound. So yesterday, I shorted the cable here, basically, okay, and I put my stops above 134. I said, listen, if it breaks above 134, we're going a lot higher. And I put my stop at 134, and I put my limit at like 130, 2 or something like that. And I kept it overnight. I woke up this morning and we had already dipped down. We had dipped down to 132.80, and we're already coming back to like we were at 133.15 or whatever. And I said, God, I'm thinking to myself, man, I know the pound's going down. I know it's going down. As long as we stay below, it's 134, 135 level, it's going down. I'm like, the Bank of England's gonna, they're gonna do what they have to do to, prepare for, the next couple of years of this Brexit situation. And I'm thinking, every analysis I read this morning, again, non-bank analysis, every piece of analysis from economists, every trader was like, oh, the pound's going to bounce, position. And I'm thinking, man, maybe I'm wrong. Am I the only person thinking, and again, there's plenty of you guys that were short the cable, I'm sure. That's not the point. The point is the masses that I was reading, I was like, man, maybe I'm wrong. Maybe I'm just not, maybe I'm not thinking about this right. And so I decided to cover my pound short, took, a 15, 18 pip profit. And I said, well, I'll just hang on to my euro pound because the euro pound, was pivoting off of trendline support right here. I said, well, even the beforehand, we were bouncing off the, and I'm like, okay, well, we did a little false breakdown. I'll hold it. And then, obviously I got out when I got to here, but my cost average was like 42, so I took a loss in it. It's just, I knew I was right. And the thing is I listened to, everybody. Everybody's analysis was the pound's gonna bounce. Pound's gonna bounce hard. Yeah.
Yeah, that's why, honestly, I listen to you and maybe one other person, maybe two, and everybody else, tell you like it is, everybody can go to hell with their analysis. Because why the hell do you listen to them when you're a way better trader than the rest of us? You see what I'm saying? So that doesn't even make any freaking sense. So like I said, I'll say it again. Other than Blake and maybe one or two other people, everybody else can go to hell with their analysis. But that's all I've got to say, but it's too bad you got wiggled out of your position.
Yeah, I did. I got wiggled out, but thanks, Paul. I appreciate that. But the thing is I usually don't listen to other people. That's the thing, is I usually there's not much that will influence me trading. There's actually very little. I mean, there's a few people that I really have a lot of respect for, and I kind of, if they say something, I'm like, okay, I really have to listen. But when it was the whole chorus, it was like everybody, I was, and that's why I was thinking, maybe I'm just wrong. Maybe it's me. Maybe my head's not on straight. And so anyway, I got wiggled out of it, and that's the point I was trying to make. I'm not singling out any one person because there were so many. And I'm not going to sit here and point them all out and point fingers and say, and they said it was going down, or they said the pound is going up, and they said the pound is going up. And it's not any one person. It was just everybody, it was everybody. And I should have just stuck with my gut because, as I've gotten older, my gut has become more and more of an important indicator. And it's proven because it protrudes out of my body much more than it did, back in my 20s and 30s. So anyway, Anna said Mark Chandler put out a note today. I know. Anna, it's everybody. And most people were wrong. Most people that I read today were wrong. I would say the majority. Anyway, I'd say everybody that I read today was wrong, but that's besides the point. Okay. Anyway, it doesn't matter now. I mean, I'm out, and it's what's done is done is done. So now it's moving forward. All right, let's go over to the Kiwi. So the Kiwi, 50% retracement. I'm thinking that we might have this. We might have a head and shoulder pattern. That's why I was shorting the Kiwi a little bit earlier. I just took a quick gain out of it. I don't know if any of you guys shorted that as well, but we had a little AB equals CD type of hourly move. I'm going to get rid of that. But right now, let's get rid of that too. We're at 50% retracement. We might get up to 72.12. I'm going to write down, because that is obviously the 618 is the 72.12 area, so 72.10. If I get an opportunity to short the Kiwi at 72.10, I'm taking it, just so you all know. You guys know I think I'm a persistent and perma bear for the Kiwi. I pretty much on a daily basis, there are very few days over the last couple of years that I have not had some sort of short Kiwi exposure. It may be in a range right now, but I pretty much keep short Kiwi exposure on the board almost all the time. Whether it's against the dollar or whether it's against the Aussie or whether it's against the euro or the cable, I pretty much have short Kiwi exposure almost all the time, just so you all know. Because I think the Kiwi is still very overpriced. I think the Kiwi is a 62-cent currency, and it's trading at 72 cents. So just so you all know my take on the Kiwi. Anyway, now that I have anything about New Zealand, against New Zealand, I really like to go visit it at some point. Support, any move down to 71.50 should support today. But you guys know when I do my analysis, obviously I don't sit here and put bearish, and I'm not going to give you biased opinion. Just my bias is always to be short the Kiwi, but it doesn't mean it goes down every day. That's for sure. All right, you got to pick and choose your battles of where it's underperforming against. Speaking of underperforming against, here's the Aussie, the Australian dollar. Now we had Australian retail sales last night. They missed, and the Aussie is still stronger. You can attribute it to risk appetite. You can attribute it to whatever you want, but the Aussie is continuing to move higher towards resistance, and at this point in time, resistance comes in at 76.50, and you guys know I'm actually going to mark up the highs here, which is 76.75, but this whole area, 76.50, 0.7675, it's all resistance. Okay. Support 75.50. Okay. Let's go over to the dollar index. FTSE's still cruising higher, by the way. Hold on. So we've got some resistance coming up here. All right, let's go over to the dollar index. I just looked at that earlier, the FTSE, so I just want to take another look at it. So here's the dollar index. Yesterday we were down here and said, oh, we're going to move higher towards resistance. Look, we hit resistance and stopped. So what does that mean? What that means is the dollar index is probing really key resistance. Period. End of story. This is critical, and now we have to mark the highs, 95.90. That is critical. Okay. We are in a range, but if we can get above this 95.90, the dollar is going to start to squeeze even further. So that would put the euro below 111, all that stuff. All right. We're in a range. Support for the dollar is not right here. Let's get rid of this, because at that point we were saying if it breaks below that support, it's bearish. We should rally back up towards resistance. We hit resistance. That was from yesterday. So support now in the dollar, it's hard to say. It's an hourly. Um, we have to go with the assumption that that spike high is going to stick for a while. 38% retracement comes in at 95.55. 50% retracement would be 95.45. If we try to develop some sort of head and shoulder pattern, it would take us down there, but I wouldn't look at that right now. I guess we have to look at the spike low. That spike low coincides with the 50%, so that is at let's call it 95.45. That's not great support today, but it's support. It'll be near-term support. Okay, let's go over to the peso. I'm actually thinking about selling some cable here. Hold on. I'm sorry, I got to look back at the pound. Sorry, guys. I sold some at 62. I just sold a little cable. We're getting into our sell zone. So remember, this is the sell zone, right? So I sold some at 62. If we get up towards 132, I'll sell a little bit more. It gets above 132.20, I'll close it. Because this is, remember from the morning's analysis, you don't want to short it down here, what I was saying about a half an hour ago. You want to sell it on a rally. So we're rallying back towards the sell zone. So I am short a little bit of pound right now. Okay, back to peso. Here's the peso. Okay, so the peso is coming right down to support, which is, I'm going to get long some peso here, just a little. Support is at 1878. Now remember, I drew this yesterday. We were here and I said, okay, a dip down towards trendline support would be a place to buy it. Well, guess what? We just hit it. So guess what I'm doing? I'm buying it. Right? Resistance is going to be at 19. Let me put my stops in here for the peso. Okay, I'll put my stop in the peso. It's great because you can trade. Like I bought it here with a tight stop. You don't have to risk a whole lot. I think we are wedging. So 19 is huge, 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 huge. We're in a range. Let's go over to the Norwegian krona. We've been bouncing around the 840 to 850. I don't think anything's changed. That's been the same from we had that 840, 850, right? Had that drawn out for a while. Here's the Swedish krona. We didn't quite get down to the support we drew yesterday. This is all drawn from yesterday, but I don't know how to trade the. I don't know what to do with the Swedish krona. All I know is this is this weekly pattern is huge, huge. I'm just gonna write down 840. I don't know. I don't think I'd try to pick up the Swedish krona anywhere near where it's at yet. Wow, look at stocks are rolling right back over, guys. This is the risk, people. This is the risk. The risk is the stock market just shrugs off everything from this morning, which is not bullish. I really don't know where support is right now on this. I'm just going to write down 840. I mean, it's just there's no reason to be on the yeah. There's no reason to be. The longer term charts, the longer term channel tells us to be long, but it doesn't like this is not the optimum time to be long. You know, it's like we're in the smack dab in the middle of this huge range right here to 875 and 840. I don't think there's any edge right where we're at. Okay. Are your bias charts done? It's finished. What time is it? Damn. Man, time has flown by this morning. Okay, let me see if I can take some comments from today. We got a lot of comments have come in.